All right. Today's SPY was down 0.66%, and intraday we did gap up very close to the price target at 460. And remember, anytime we're talking about price targets, you want to take profits on your long positions as we approach those levels because they are considered to be resistance, and you want to make sure you lock your profits. And today, because we gapped up, it was an even easier decision to lock profits because that meant we had this gap to fill down here. And then as you can see, the selling pressure continued all day long and we closed near the low of the day, but above support. So the one thing I want to talk about today very quickly is I just want to start zoomed out on this chart of SPY. And I want you to see how obvious it is when you take out all biases and you just look at the chart. It is very obvious this is a bull trend. Now, the reason I want to go over this today is because with a candle like today, and as we're approaching the previous all-time highs, the bears are going to get louder and louder, and they've been loud all year long, even though they've been wrong all year long. There is an obsession that the stock market has to crash. And if you do your research on stock market crashes, they are extremely rare. And last year, the S&P 500 was down around 27%, so we already had the crash. So just be very careful who you're listening to and what noise you're listening to, because the only noise you should be listening to is the noise on the chart, which means you should be following the trend and the price action. When you look at this trend and how high we've come, and then you get a candle like today, without a doubt, the bears' faces are going to look just like this. This is an obsession with red days, and this is an obsession with the market moving lower because they're bear biased. And they want you to be bear biased with them so they feel better about their losses. So moving forward, I want you to be very disciplined on following price, and I want you to understand every entry you make, where you're going to lock profits and where you're going to take your losses if you're wrong on the trade. And I want you to make every trade around a critical risk level, which I'm giving you each and every day on these updates. And we're talking about each and every day in the Stocks Channel Discord server. If you do this, you will not only become a much better trader, but you will open your eyes to a whole nother world of profitability when you take out all of your bias and you strictly only trade what is given on the charts. All right, so now let's put the levels back on the chart and let's zoom in here, and we can see SPY did gap up near that target at 460. And whether or not we actually go touch 460 to the penny is irrelevant because that is very close to the target and we gapped up, so we obviously had the profit taking. So what's important to know from here is that we are approaching this critical support I told you at 452. Remember, the break of 455 meant we were likely going to 460, and as far as I'm concerned, we've already done that. And now that we're back down towards support at 452, this is the only critical level you should be paying attention to. If you want to short this market, you need this level to fail as support. And if you want to go long on the market, this is going to be your risk level. If we break down below 452, we are likely coming back down towards the rising 20 daily moving average. And that's also going to be that support right around 448. Both of those levels are basically going to be the same exact level with tomorrow's price action. So you are looking for the support at 448 if we break the support at 452. Now, as I just talked about, this is a very obviously bearish looking candle, and it's almost too obvious because it's coming from a brand new high right around 460, and it is bearish engulfing, but we did not lose any critical support. So the fact that it looks bearish is irrelevant until we break down below the low and break that support at 452. So if you want to short this market, or you're already shorting this market, you should be waiting until SPY breaks below 452 to either add to that position or to start that position. And then keep in mind, if we break 452, we're only going a little bit lower until we're at the next strong support right around 448. So that is not a lot of meat on the bone to take on that much risk for that little bit of reward. So what I'm trying to tell you is no matter how bear biased you want to be, this is still not a market you want to try to be shorting. You could do whatever the hell you want with your money. I'm not telling you what to do. I am strictly telling you the risk and reward does not favor it yet, and this chart is still incredibly bullish. So what I actually think is going to happen is I think there's a good chance all of this is a bear trap, and we're going right back higher once we bounce from one of these support levels, which really doesn't give a lot more room to the downside before we go even higher. Obviously, that doesn't guarantee I'm correct, but if you understand this is the highest likely probability, then it could save you some money from shorting this market. At least if the highest probability is wrong, you still took the best odds and you still took the best risk reward ratio. So if you're going long the market, you're right here at support at 452. And if we break 452, you're right at support at 448. So you have very well-defined risk. If you're shorting the market and you're going to ignore everything I just told you, then manage your risk right around 455. And above that, you should be managing your risk from 460. So at some point, this bull trend is going to end, and at some point we are going to see it happening, but we're going to wait until that day comes, which means we need a lower high into a lower low and a clear break of the bull trend, which is going to require a break of critical support. I'm not saying it won't happen, and I'm not saying when it will happen. I'm strictly telling you I'm going to wait for the price action to prove it, and then we will start tracking the downtrend. Right now, this is an uptrend, which means you should be looking for opportunities to buy off support levels. Jumping over to the NASDAQ 100 triple Qs, we have basically the same exact story as SPY, where we gapped up right at that resistance at 383, and we had the profit taking into the gap fill, and then the selling continued, and we closed near the low of the day, but again above support. On the triple Qs, the critical support is 374, and we closed above 376, so there is nothing on this chart that tells us the bull trend is ending and we're going lower just yet. Now, all of that changes quickly if we break below 374 and start making a lower low after this lower high rejection. Then, of course, that's going to look a lot more bearish, and then it's a lot easier to short the market because we have a downtrend. So on the triple Qs, I'm only giving you one critical support level to pay attention to, and that's 374. There is other support below that, but that is the critical one, so that's the one you should be focusing on. If we break 374, we should easily fill the gap below 369, and then of course we can go lower towards the 50 EMA because we will have the lower low from the lower high. So critical resistance levels remain the 383 to 387 zone, and if we break that, we're going to 393 next. As I've said before, it's a bull trend, so there is no excuse why we can't bounce from this support and go reach another higher high. On the Dow Jones, we were down 0.7% today, and we came right back down to the support at the breakout at 353, and if this level fails to hold as support, we'll be looking for the gap fill right around 350 and the rising 20 daily moving average right around 347. Again, these are bull trends of higher lows and higher highs, so we need no excuse to go higher, and if we're going lower, we are looking for higher lows until we lose critical support. Critical support in the Dow remains 346. On the Russell 2000 IWM ETF, we were down 1.29%, and we were very close to the price target right there, right around 198. And then we had the profit taking, and we closed down below the support at 195. And we're sitting right on top of the rising 13 EMA and the rising 20 daily moving average. So we are still in a bull trend, but price action is obviously bearish engulfing right here as we approach support. So if we lose support, look for the gap fill at 190, and the critical support remains 188. On the ARKK ETF, we were down nearly 3% today, and we came right back down to the rising 20 daily moving average. And as I've said before, this is trying to break out of the bear market resistance, which usually means we are going to test that breakout and confirm it before we go any higher. And that is the confirmation we need to see to say that the bear market is ending, which is going to require us to hold that support right around 46. If we get down to 46 and we slice right through it, that is obviously a false breakout, and we're not out of the ARKK ETF bear market just yet. So it's all going to depend on what happens over the coming weeks with the price action in this critical support zone. On the VIX, we were up 9.26% today, and the VIX hit 15 and instantly got rejected. So while we are seeing a spike in volatility, we have not yet seen the spike out above 15. That doesn't mean we can't see it. It could happen as soon as tomorrow, but I would not expect it to happen. I would wait for confirmation and proof that it's happening, and then watch those critical support levels that I gave you on the indices, and then you can instantly get a lot more bearish. On Bitcoin, we're currently down 0.66%, getting that rejection from the retest at the breakdown of support, which is obviously bearish. If we get rejected from this as resistance after a retest of the breakdown, then that means we're going down towards support at 28,000. Below that, we go down to the rising 200 daily moving average, and we're not bullish until we break above 31,000. On Tesla stock, we were down 3.27% today, continuing that rejection below the 20 daily moving average, which is why I said I would not be getting bullish in Tesla unless we break resistance at 274. We're likely heading down towards the 50 EMA of support at 247, the previous low at 241, and then the gap fill at 235 as long as we're trading below 274. I'm instantly more bullish if we break that resistance, and then I'll be looking for the upside price target above 274, right there at the gap fill above 289. On Apple stock, we were down 0.66% today, and Apple tried to break out yet again and reach that price target, and it was very close to doing so outside the upper Bollinger Band, but again saw sellers and came all the way back down towards the support at 193. Critical support in Apple is right around 191 to 192, and we do have a gap to fill just above 191. So if we lose all of this support right around 190, we'll likely come back down towards 185. However, if we break out and continue higher, we can still reach that price target again or hit a brand new price target right around the nice whole round number of 200. So jumping back over to the S&P 500, it's very important to remember this is a bull trend until price action proves otherwise. And there have been people trying to call tops all year long, saying that we wouldn't go to SPY 420, and then we wouldn't go to 430, and then we wouldn't go to 440, and then here we are almost hitting 460. You're going to hear those bearish narratives all year long because there are people shorting this market, losing money, and they will not give up on their bear bias even though the chart is very clearly bullish. We'll get bearish when the time comes and when the chart tells us to, but we're not going to guess and we're not going to try to predict any tops or any crashes. We are going to make the price action prove everything. This is the best way to trade. This is the best way to manage risk. And this is the best way to stay profitable. If you want to crush this market, consider joining Bang Trade Alerts or the Stocks Channel Discord server. You can find out more information about either service and learn how to subscribe by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.